Let's tell you about AT&T earnings that have crossed now. Adjusted earnings came in at 94 cents a share. That was a penny better than the street was expecting. Revenue slightly above or slightly below forecast, but the real news here is the three-year financial guidance and capital allocation plan that they've put out. They're now looking at adjusted earnings per share growth of $4.50 to $4.80 by 2022. If you look at the street's expectations for that, the street was at $3.59. They say that does include the HBO Max investment. They expect revenue growth every year, 1% to 2%, over the three-year period for that. They are also looking at dividend growth. They are looking at continued modest annual increases, dividends as a percent of free cash flow, less than 50% in 2022. Capital allocation, 50 to 70% of free cash flow post-dividend from retiring about 70% of shares issued for the Time Warner deal. They expect to pay off 100% of the acquisition debt from the Time Warner deal, I believe, by 2022. And for the portfolio review, this has been so talked about by Elliott Management, the things they were pushing for. They are saying continued disciplined review of portfolio with no major acquisitions. That does not mention anything about what they may or may not spin off down the road. For the board, they say continued board refreshment with one prospective new director to be considered at the next board meeting and another in 2020. The CEO transition, Randall Stevenson, the CEO transition is not expected in 2020. It does not lay out when they would expect to see that, but it would not be this year or next.
You tell me, is this placate Elliott Management and investors who were looking for
well, if you're looking at the adjusted
shifts?
earnings per share growth, if you believe it, for 2022, that's a big increase in what they would be expecting to earn by 2022. Dividend growth. If you had any questions about what was going to happen to the dividend, they are expecting continued modest annual
covered
increases.
Too. Less than.
Yeah. So I guess
less
if you're
than
looking at
50% of free cash flow.
Right.
Stock is up almost 2%. So if you take that as any indication.